Billionaire investor Warren Buffett has a message to those making AI videos of him. There's only one Oracle of Omaha. Berkshire Hathaway issuing a statement titled, "It's Not Me," on Thursday night. In it, concerns are raised about AI-generated videos that include images of Buffett, paired with a voice that clearly isn't his, like the video referenced in Berkshire's statement.
Most people over 50 think their best financial days are behind them. They're dead wrong.
The statement goes on to say Mr. Buffett is concerned that these types of fraudulent videos are becoming a spreading virus. Company issuing the warning in case people who aren't as familiar with his voice actually believe the content in these videos. And Buffett has been outspoken about this issue in the past, remember, especially when it came to political endorsements in recent presidential elections. It is worth noting the account behind the earlier video does have a disclaimer saying the voices on the channel are AI generated and that there is no attempt to imitate or impersonate any individual. Also included in the statement, Berkshire will be publishing another press release on Monday, November 10th, with a message from Buffett about philanthropy, Berkshire, and other matters that shareholders might find of interest. And it could be his final message at the helm of the conglomerate. Remember, Buffett is stepping down as CEO of Berkshire Hathaway at the end of the year and will be replaced by longtime Lieutenant Greg Abel. Well, with over 75% approval from Tesla shareholders, CEO Elon Musk's new pay package gets the green light. Package could reach $1 trillion in overall compensation for Musk, but not without some lofty milestones that must be reached before receiving that full award. Yet Musk seeing even bigger ambitions ahead for the company.
Even when we extrapolate the best case scenario for chip production from our suppliers, it's still not enough. So I think we may have to do a Tesla terafab. So it's like Giga, but way bigger. I can't see any other way to get to the volume of chips that we're looking for. So I think we're probably going to have to build a gigantic chip fab.
Well, here with more on the next chapter for Tesla is Gautam Mukunda, Yale School of Management Lecturer of Management Practice. Gautam, always good to see you, my friend. So Tesla, all right, they approved the pay package. These are some big milestones Musk would need to hit. I think it's just worth taking a step here and repeating them. Tesla has to deliver 20 million Teslas. Now that actually sounds like the relatively easy part. Deploy 1 million robo-taxis, deploy 1 million robots, has to hit 400 billion of adjusted EBITDA over 4 separate quarters. I guess stop right there, Gautam. Do you think, would you place your bet Musk will actually hit these milestones and get that payday?
No. I would not, just because if you look at Tesla, the underlying fundamentals are they haven't had a successful major product launch, right? Like they have not had a new car come out that has done well in the market in 5 years, and they don't appear to have any prospects of one coming soon. And then that's even setting aside the problem of that with automated taxis, where again, they are not the technology leader, or autonomous robots where they are not the technology leader. The evidence that Tesla is going to dominate these industries is that Elon Musk says they will. That's it. So no, I wouldn't take that bet.
This pay package did pass, though, Gautam, with 75% of support among voting shares. What did you make of that? Were you surprised by that, Gautam?
No, not at all. If you are invested in Tesla right now, it's because you believe that essentially that Elon Musk has magical powers. That the fact that Elon Musk has this track record of doing extraordinary things, and that takes nothing away from the scale of his achievements in, pushing electric cars forward by a generation, or basically inventing the modern commercial space industry with SpaceX. It doesn't take anything away from the scale of his achievements to say that that doesn't mean he can do it again, right? It doesn't mean that there's not an infinite chain of miracles here. But that's how Tesla's being valued. So if you are invested in Tesla right now, you believe that he can do it again. And if you believe that he can do it again, if you believe he has magic powers, well, then you should vote yes, because then it makes sense.
Let me ask you, Gautam, if you were in charge of the pay package, I'm just curious, what's the pay package Gautam would have designed?
I would have said, Elon, you already own about 15% of Tesla. If you do all of this stuff, you will be a trillionaire anyways, right? So it's really clear. This pay package doesn't give him $1 trillion. It gives him a second $1 trillion, right? That's what it gives him. So he would have one already. I don't actually know what you can buy with $2 trillion that you can't buy with $1 trillion. So the pay package I would have given him is I would have said, hey, Elon, if you succeed with Tesla, you're going to be a trillionaire. That seems like a great incentive for you. And what we really need to do is manage the fact that take all of the skills and the assets that allowed you to do what you've done in the past and kind of harness them, because what you've done in the last few years doesn't seem like the same Elon Musk. We noticed some real deteriorations in your behavior, and we're going to design a pay package to see if we can get that under control.
Gautam, there was another piece of this shareholder meeting which I thought was really interesting, and I want to get your take on it, your interpretation. That shareholders voted in favor of Tesla investing in Musk's AI startup, XAI, but reports noting there were many abstentions there. And I thought that was sort of curious, and I wonder what that might suggest to you or indicate to you.
So it is really strange, and I think it's essentially some shareholders saying that, this is a bridge too far. This is, like we're piling violations of corporate governance on top of violations of corporate governance, right? I'm just imagining some colleague of mine who teaches board behavior coming in with a Tesla case, just putting it in front of the students and then putting his head in his hands and saying, for the love of God, don't do any of this, right? And I think that maybe it's shareholders saying we want to register our disapproval of this remarkable thing, but we don't actually want to go as far as voting against you because we're worried about what Musk might react, how Musk might react, and we're hoping that this is the kind of signal he might pick up on.
What do you think if shareholders hadn't voted for this? What could the fallout actually have looked like, Gautam?
So this is where the whole thing falls apart to me, right? So Elon Musk is the he's this enormous shareholder of Tesla. The valuation of Tesla is fundamentally dependent upon Elon Musk, right? Like we have to invent whole new words for key man risk to describe Elon Musk's importance to Tesla. If he were to leave, as he, supposedly was threatening to do if he didn't get this pay package, the person who would be most hurt is Elon Musk, right? So the threat of his departure it doesn't hold together. What would he do if he left and he's suddenly not the richest man in the world? Probably wouldn't even be close to that after that. I just don't see that as a plausible thing. And that's where the board seems to have decided that its job as the board of directors is to nod like a bobblehead and give Elon whatever he asks for. And that is not the job of a competent board.
Gautam, I will end here. Fun piece from my friend Al Root over at Barron's. I would love your take on this. And he was kind of talking about Tesla is rapidly becoming the Berkshire of the tech sector. Talking about how its annual meeting is starting to kind of feel like the Berkshire annual gathering. Sort of, pilgrimage of the faithful, Gautam, right? Kind of fun, upbeat. So does that mean, Al asks, Musk is the new Buffett? And Al pointing out some similarities and differences. I want your take. He says, well, neither takes much in the way of traditional annual compensation. Fair enough. Though he also notes Berkshire doesn't award giant stock-based pay packages, of course. Just curious to end there on the Gautam take.
So, Buffett was the Oracle of Omaha because he had built over this long career this sort of reputation where people would follow whatever he said. And, Musk has done amazing things. I would never say that. So if you want to take everything that he says very seriously because of that, I would do that. But the Musk we're getting today is just not the Elon Musk who, I really admired for what he'd done at SpaceX and Tesla. He's just a different guy, and we can speculate about why that is, but it's very real. And so I get the oracular comparison and the cult of personality comparison, but cults of personality don't usually end well for the people in the cult. I would be a little worried about this one too.
Gautam, great as always to have you on the show. Enjoy the weekend.
You too.
Now time for some of today's trending tickers. We're going to take a look at Wynn Resorts, Sweetgreen, and Archer Aviation. Join me here to discuss. We have Yahoo Finance's Brooke DePalma. We're going to start off with Wynn Resorts, the company reporting an earnings miss in the third quarter, but highlighting EBITDA growth in Macau. So this one, all right, we had the miss. What do bulls say on a day like this? They say, well, here's Morgan Stanley, cited as saying strong Macau, luxury Las Vegas performance, they point out. Still trades, they note, below historical valuation multiples. Most on the street do still like this one. 80% of analysts say it's a buy. Stock is at a run. It's up about 45% this year.
Yeah, heading into this report year to date, that stock did have a nice run, and now we're seeing a bit of a pop even going after this report today. And we're hearing similar rhetoric on the street. Jefferies, for example, saying solid quarter in all markets with catalyst path ahead. Also, interesting point out from Stifel analysts. It's been something we've been covering really, really closely, and that's the high income consumer. Essentially, this note went on to say that the high end is clearly where you want to be in this macro backdrop. Think it's as simple as that. He said that given Wynn is one of the latest companies under his coverage to report, it's crystal clear here that the higher end consumer facing companies are in a much different stratosphere versus, say, low income consumer facing companies and middle income consumer facing companies. Of course, Wynn is known for that Las Vegas strip. They also have some Boston operations, and they're really building quite a few more. And so the high income consumer is where you want your audience to be right now.
All right, move on. Let's check out Sweetgreen as well. The company missing expectations across the board, cut its full year outlook in its latest results. That led to price target cuts on the stock across multiple forms. We were talking about this one, Brooke. So 3 consecutive quarters of contraction of same store sales, cut its outlook, it looks like for the 3rd time this year. Stock plunges to a record low.
Josh, I have a story out on Yahoo Finance's website this afternoon, and it really is about how the Gen Z consumer is the reason that we're seeing fast casual not really play out well, because Sweetgreen is not alone. We also heard from Kava and Chipotle all pointing out that this age group between 25 to 34 is significantly under pressure. That age group facing higher unemployment, that age group also facing higher inflation when it comes to rent. They're facing slower wage growth, and also there's student loan repayments. So those return for the first time in April. It's likely the first time that maybe this younger age group is facing student loan repayments since they were paused during the pandemic. And Gen Z facing financial pressures is ultimately leading to these companies like Sweetgreen not doing well in this environment. And we're seeing really that span across this fast casual landscape. And Sweetgreen, just the latest, they cut that guidance. They saw yet again another quarter of same-store sales decline after most of these companies have pretty good 2024s.
All right, finally, lastly, Archer Aviation sliding here after reporting 3rd quarter results and disclosing a share sale. So this one, but a couple pieces of news here. It looks like one, buying Hawthorne Airport in Los Angeles. They're also offering shares at $8 each to certain institutional investors, raise gross proceeds of $650 million. Part of that will be used, it looks like, to fund the acquisition per reports. Arch, of course, trying to bring electric vertical takeoff and landing aircraft to market.
Yeah, and the reason why they want that airport is because they were chosen as the official air taxi provider for the 2028 Olympics in LA. There's such a thing, official air taxi provider. I mean, this just goes to show how big the air taxi industry is going to grow over the next few years. Archer Aviation did say for the current quarter they expect a loss between $110 million to $140 million. Now, keep in mind, one of their biggest competitors is Joby Aviation, and we have seen that company also see quite a run. It's up more than 80% year to date, and today alone it is getting a bit of a pop. It's up more than 3%, but certainly this global air taxi market, something to keep an eye on, I guess.
For sure. Brooke, thank you. Coming up, closing bell on Wall Street, we've got the latest market moves plus an update on all things crypto and gold. That is the closing bell on Wall Street, and now it's market domination overtime. We're giving you full coverage of all the moves to get you up to speed on the action from today's trade. And Yahoo Finance's Brooke DePalma joining us now with the latest market action. Brooke.
Good afternoon, Josh. Certainly what we see at the close here is some downward momentum across the NASDAQ, but the Dow did reverse off of those losses that we did see today, closing about 0.2%. We also have the S&P 500 seeing some reverses of those losses during today's trading session as well. It closed about 0.1% higher, but the NASDAQ really seeing some downward momentum, and that held until the close this afternoon, down about 0.2%. I do want to take a closer look at the NASDAQ because this is really a market where investors are trying trying to digest risks of an AI bubble, also those high tech valuations. And speaking of, we did see some of the Mag 7, including Tesla, end the day lower, down nearly 4% at the close here after we got that shareholder vote approving Elon Musk's latest pay package. Leading into that shareholder vote meeting on Thursday afternoon, it was mostly flat, but over the past month, we did see some mostly flat as well, but over the past 3 months, we did see that stock reverse into the green for the first time this year as momentum was underway, up about 30% in the last 3 months. But Nvidia flat, Amazon, Meta mostly flat as well, but Google, Apple, and Microsoft all in the red to end today as investors digest that government shutdown, those high tech valuations, and also consumer sentiment, which here hit a 3-year low.
All right, thank you, Brooke. While gold sitting here near the $4,000 level, remaining steady after last month's sharp sell-off, Yahoo Finance's Ines Ferre joins us here with the very latest. Ines.
Yeah, Josh, we have been seeing a consolidation period for gold with gold futures up above the $4,000 level. Of course, we had the recent sell-off in gold when it came off its all-time high. But Macquarie Group put out a note this week basically saying that they believe that the peak is in for gold prices, those prices where we saw the futures going above $4,350 per ounce. They're saying that because central banks, their easing is winding down, real rates are still elevated, and the tensions with China have eased for now. Remember that the Federal Reserve started easing, but the central banks around the world had also been easing beforehand. And it's a question mark whether the Fed will be also easing in again, or will be lowering rates in December. But they're saying, Macquarie Group is saying that they believe that gold prices are going to go down going into next year. That is a little bit of a contradiction with what some other analysts on the street are speculating. You've got Goldman Sachs and also UBS that believe that the gold prices will go higher going into next year, despite the volatility that we've seen in recent weeks.
All right, as that's gold, what about all things crypto? Give us the update there.
Yeah, so we have seen that crypto has been, I'm going to pull up the chart for crypto here. So we've seen that Bitcoin had gone this week down briefly below the $100,000 level. And we spoke to 10X Research, this is a Singapore-based firm, which had predicted back in October that you would see Bitcoin prices going down to the $100,000 level. And their main researcher is saying that Bitcoin, because of the big move that we saw, the deleveraging that we saw on October 10th, the whales that have been selling really since the summertime and over the last month, you've seen these long-term holders that have been selling their Bitcoin. That has taken out important levels when it comes to Bitcoin. So what this firm is predicting is that you could see Bitcoin going even lower in the near term. So we may not have seen a bottom. That's according to this firm, saying that if you break below the 93,000 level, you're going to hit an air pocket after that, and then you could go into the 70s even. Now, there are catalysts that could drive Bitcoin higher. That would include the Fed cutting in December, regime change at the Fed if we get some notice as to who would be the next Fed chair, and of course the government reopening. That has also been sort of a headwind according to some strategists for crypto. Josh?
All right, thank you, Ines. Well, it's jobs day, but without a jobs report, adding to the economic uncertainty amid the weakest consumer sentiment print since June 2022. Joining me now, we have Thomas Simons, Chief U.S. Economist at Jefferies. Tom, always great to see you. So let's start there, Tom. You got jobs day, but no jobs report. We turn to you, Tom, though, smart economist that you are, for insight. What do you see, Tom, for this U.S. labor market now and ahead?
So, data-free Employment Friday is not an easy thing to deal with, but there are a couple of different bits and pieces of information that we can gather from some of the private sector data, some kind of backdoor attempts at trying to estimate jobless claims, and also I think overlaying that against the private consumer confidence data and some announcements of job cuts from various different firms. So to kind of pull back, it looks like jobless claims, if you look at the state level data, have been pretty steady on the week to week basis, but continuing claims are starting to increase quite a bit. The payroll data, whether it's from ADP or from Revelio, seems to be kind of fluctuating around zero. So I don't think that it's showing us a big crack in the labor market just yet. But again, continuing claims going higher, that suggests that people who are losing a job are having a harder time finding work. And that really lines up pretty well with some of the survey responses we saw in the University of Michigan data as well. I believe that the number of respondents saying that they think the unemployment rate is going to go higher in the next year was more than double what it was in November of 2024. And then, of course, you, like I said, overlay that against announcements from some rather large companies, like I believe Amazon earlier this week, saying that they're going to cut a lot of white-collar positions, and kind of signals that perhaps the labor hoarding days are over, and that companies now view the labor supply as easy enough that they can roll things back up if momentum comes back.
You mentioned, Tom, that November University of Michigan consumer confidence reading we got this morning, that made headlines, falling there to a near record low at 50.3. I saw some economists saying, Thomas, well, they said, not great, but they were telling their clients, you should take this with a grain of salt because in part what you're seeing there is the drag from the government shutdown. And listen, we don't know when, but this will end at some point. Is that how you saw it?
So not really. I think it's actually something that we should be a little bit more concerned about. The fact that the spontaneous mentions of the government shutdown, we're talking about people not getting various benefits that they need to fund their consumption, or if it's the loss of employment from, by a family member or the individual respondent themselves. They're going to have to face some very difficult choices if the labor market, if the government doesn't open up quickly. I believe there was an interview I saw with BLS official earlier this week talking about how there's going to be delays in putting the data back together once the government reopens, because they're not sure that all of the BLS employees that have been on furlough are actually going to come back. So if that's the case, you could have people that are taking worse jobs than they had before in some cases, or just kind of aimlessly looking around for something else that they can do with a difficult skill set to transfer. So that, combined with the fact that we're starting to see some pretty significant deterioration in confidence amongst the middle income tercile. They split it out into three groups. Highest income group tends to be pretty optimistic for the most part, and it goes down from there. But where they typically kind of have a stratified trend, both the lower and the middle group are coming down pretty significantly in the last couple months. So if we have 2/3 of the income distribution that's now feeling quite a bit worse, it feels to me like maybe we'll make new lows in this index in the months ahead. Let
me ask you, Thomas, on this same thing, the government shutdown. I don't know if you saw this. You had these comments from Kevin Hassett. He gave an interview about the government shutdown, saying the economic impact of the shutdown far worse than expected. Though did then add economy likely to rebound quickly once it does end. Does that sort of generally dovetail with your thinking?
Yeah, I think that you have to think of it in terms of just like lost time, right? Like if an airline, for instance, has to cancel a bunch of flights, they don't get that day back in the year, right? So they can't rebook all the flights that they would have sold during the quarter or during the year if there are problems that limit their schedule. And I think we can sort of think about that in a broader sense of just anything that's funded by the government, consumption that's funded by government subsidy. All these things are just going to be sort of missing from Q4. And then as we get into Q1, it's not like people will double their consumption necessarily on a number of things. It's just sort of a deadweight loss. So I don't think that we're at risk that the government shutdown is going to sort of crumble structural forces that support the economy. And I'm not really worried that the weakness is going to cascade into something far worse as you go on, but just that, you're not going to see, for instance, like a drag of 2 percentage points of GDP in Q4 and then immediately assume you get it all back in Q1. Something's going to be lost.
What does the trajectory of GDP look like from here, though, Tom? Which has, of course, been hanging in there.
It has been, but it also has been quite a while since we've gotten many of the inputs that we would be using to try to keep account of where GDP is headed in Q3 and Q4. Heading into this quarter, I think momentum was quite strong. I guess Q2 is the last print that we had, and that was a nice upside surprise. In Q3, it looked like the momentum was carrying through pretty nicely through the end of September. But if we're looking at those 3+ percentage point quarter-over-quarter growth rates in Q2 and Q3, feels almost impossible that you would get anything similar in Q4. We're probably looking at something with a 1 or a 0 handle, depending on how much longer the shutdown persists, and once we get a better sense of kind of like what the overall kind of fallout is.
Tom, always great to have you on the show. Thank you.
Thank you, Josh.
Coming up, the government shutdown rolls on and flight cancellations could ramp up. We've got the latest out of D.C. That's straight ahead. It's looking like another weekend of government gridlock is in store as senators hunker down in Washington. No clear end to the shutdown in sight. The standoff is now the longest in U.S. history. And joining me now for more, we got Yahoo Finance Washington correspondent Ben Worschel. Ben.
Yeah, Josh. So we had another day of kind of shutdown back and forth, but at an increased velocity here in Washington that I think is indicative of at least the sides are talking, which is a change in and of itself. The bottom line, as you laid out at the top, no signs of any deal coming together anytime soon, and there's going to be kind of a weekend of talks there ahead of another week of back and forth there. But the main thing was these various proposals. Senate Majority Leader John Thune is pushing an idea kind of partial appropriations bill and funding the government for a few months. There's a revised plan to pay government workers for a few months, And then in the last couple hours, Senate Minority Leader Chuck Schumer came forward with a plan to extend Obamacare subsidies for 1 year in return for reopening the government. All three of those plans were immediately kind of completely shot down, especially in the case of the Schumer plan, or kind of ran into trouble immediately. But at least there's sort of a back and forth happening here as we go forward. The word Senate Majority Leader John Thune used while he shot down the Schumer plan was that it's a sign of progress. So I think there's at least a kind of talks happening that's going to continue over the weekend, potentially more votes. But the expectation here on the timeline is a bunch of more days of shutdown, but maybe hopefully real talks next week.
Ben, let me ask you, I'm sure one question viewers have is what the potential economic effects and implications and ripple effects of this shutdown could be. What are you seeing and hearing on that front?
Mm-hmm. Yeah, there's a few areas that are just really, really sort of at the epicenter right now of it. The flights are the main one. I just checked the FlightAware website, and their latest count of cancellations today alone is over 1,400 cancellations. So this is a real impact across at 40 airports across the country because of a recent FAA order to limit air traffic by 4% today, 10% next week. And then Transportation Secretary Sean Duffy even floated today that could go higher if things go on. So much more travel delays. That will become even more of an issue. It's already the top issue, but it'll be even more the top issue as we get closer to Thanksgiving. One area of relief in the last couple hours that I think will blunt at least some of the economic effects is the food benefits program. There was a court order yesterday that the Trump administration had to pay full benefits to SNAP. It had talked about a plan to pay partial benefits, and the USDA just in the last couple hours announced that they would issue full issuances there. So that'll be a really good news for the 1 in 8 Americans that rely on these benefits. But the bottom line is it's a complex program, so it'll take a few days to play out. So a lot of overall macroeconomic effects, but the airports are really what folks are watching kind of on a day-to-day basis to see where that pressure point is.
Ben, I'll get you out of here on this. Do we know, Ben, who the American people are blaming for this shutdown? Mm-hmm. What are the polls indicating?
Yeah, so there's been a lot of polling on this, as you might have expected. It shows a pretty consistent average here, which is Americans actually blame the Republicans a little bit more. That was definitely not the Republicans' expectations going into this, considering that it's Democrats who are picking a policy fight here to make this shutdown about this healthcare issue. But Republicans have had an increased, had a little bit more blame when voters are asked specifically about the shutdown. We also saw the election this week. The Democrats are definitely taking as a sign that they're standing up on the healthcare issue is paying them political dividends, at least, with wins across the board from Virginia to California to New Jersey. Another polling response I'm watching really closely is Trump's approval rating. That has moved pretty significantly when you look at the overall averages in the last few months. A lot of factors go into that. It's a lot more than shutdown. I think affordability is a key one there. More broadly, just what people pay at the grocery store is really weighing on his approval rating there. But that's clearly having an effect on the president that I think could impact these shutdown talks, as well as every other part of the Trump agenda.
Yeah, it's interesting to hear and see the president emphasizing that issue of affordability more recently. Ben,
yeah, real big moment of there today at the White House. It was just a sort of, you could see it. He was there with the Prime Minister of Hungary, and then sort of went into kind of a 5-minute, even longer back and forth with the reporters over this affordability. It's a really sort of key issue for him.
Yeah, for sure. Ben, great to see you. Thank you, sir. Software sector is shifting from AI hype to hard results. And investors want to know who's actually cashing in here, from enterprise adoption and cloud competition to M&A that could reshape the landscape. We're navigating how to play the software space with the Yahoo Finance playbook. And joining me now, we have Jackson Ader, Managing Director and Equity Research Analyst at KeyBank Capital Markets. Jackson, great to see you. Let's start maybe there with that AI theme, Jackson. You know, obviously we see consumers experimenting and adopting, Jackson. I'm curious, what are you seeing in the enterprise, though? You know, a space you know very well. What are the trends?
Yeah, I think there are two clear trends in the enterprise. One is that some enterprise software players are quickly becoming some AI hardware players, right? So Microsoft with their Azure business and Oracle with their Oracle Cloud Infrastructure business are into the AI infrastructure game. And then the rest of the enterprise, the companies like Salesforce and either in Adobe or ServiceNow, they are trying to sell enterprise AI agents or enterprise AI software and embed them into their current products to then go and sell to customers.
How do you, Jax, I'm just curious, is it tough as a financial analyst to try and distinguish, okay, this is genuine AI monetization versus marketing fluff?
Yes, it is. Because we are subject to what the companies want to disclose and what they, want to tell us. But, I think that it all comes out in the numbers. If a company is telling you that their AI products are on fire and yet their revenue growth continues to decline or decelerate, you can make your own assumptions, I think, about that. And on the flip side, if you start to see some leading indicators like net retention rate, or I really like to look at net revenue dollars added in a quarter or in a year, that kind of tells you if the net revenue dollars added are also growing, then that kind of tells you some things are moving in a positive direction. And that might be due to artificial intelligence actually being monetized at some of these software companies.
So who would you say, Jackson, just based on your coverage universe, the names you know so well, who would you say, okay, these are some names that are leading the pack when it comes to AI monetization?
I think one to look at that is interesting so far is probably ServiceNow, because ServiceNow has an actual SKU, an actual product line called their Pro Plus for their Now Assist that is still seat-based, but has AI functionality built right into it. But they get to run a very similar playbook that they have before, which is go to their install base and sell this new AI product SKU that is not necessarily, dependent on whether people use the AI a bunch or whether the agents are going off and creating a ton of value and getting this hybrid revenue model. They're still mostly seat-based, but they're talking about getting to $500 million in ARR from that AI SKU by the end of this year, and then up to $1 billion by the time we get to the end of 2026.
I want to switch and talk about the great cloud wars too, Jackson. When you would think about that war, you used to think, okay, it's Amazon, it's Alphabet, it's Microsoft. Is Oracle now officially that fourth player? And maybe, Jackson, at some point could even supplant one of those three?
Yeah, I think so. I think OCI, at least in terms of the call it the US based cloud companies, is absolutely the fourth horseman. I mean, you don't sign $300 billion of contracts for your infrastructure and not be part of that exclusive club. So I absolutely view them as kind of a fourth hyperscaler here. But it is interesting. Some of the other hyperscalers, whether it's AWS or GCP or Microsoft Azure, they are really seeing really strong adoption from the more traditional moving workloads on a CPU basis, or moving workloads from someone else's basement to the hyperscaler's basement. Oracle really doesn't have much of that type of a business. They are really moving forward with the GPU-based hyperscaler model. And so that's why they get a seat at the table today that they didn't necessarily maybe 5 and 10 years ago.
The past week, Jackson, it's been a bit bumpy for Oracle. It is down about 10%. Is that just Oracle getting caught up in this kind of broader, AI valuation worries, or something more there?
I think so, because they are, Oracle Cloud for a little while here during the GPU race was viewed almost as the spillover cloud. If you couldn't get capacity from maybe Azure, you would try and see if you could get it from Oracle or from one of the neo clouds. And so if you are getting the incremental dollars or incremental spend in the GPU clouds, then if there is any kind of risk that spend might be getting ahead of itself, it's logical, I think, for investors to say, well, this company is a little more levered to that spend than others. And so if there are going to be worries about the spend, it's going to be Oracle that'll feel the brunt of that. The other thing is, we cover both Microsoft and Oracle. In our estimation, we believe Microsoft is going to have enough cash flow and cash flow from operations to cover what they're going to need for their CapEx for the next few years, whereas Oracle is going to have to dip into those. We have them at negative free cash flow for the next few years, and they're going to have to finance a lot of this build out.
Jackson, great to see you as always. Thank you.
Thanks, Josh.
Time now for What to Watch. Going to start off here on the earnings front. Got another big week of reports, including CoreWeave, Paramount, Skydance, and Walt Disney. Disney is going to be announcing results for the fourth quarter ahead of the open on Thursday. Analysts expecting a solid Q4 for the company, driven by strong performance in its parks business, despite competition from Comcast's new Epic Universe theme park. And taking a look at the Federal Reserve, big batch of Fed commentary coming up with at least 8 officials set to speak. This is coming after comments from Fed Vice Chair Philip Jefferson on Friday, when he said the Fed should proceed carefully now that rates are closer to a neutral level, one that neither slows nor boosts the economy. And checking in on small businesses, the NFIB Small Business Optimism Index is coming out on Tuesday. Economists forecasting that number to fall slightly to 98.4, signaling small business owners are feeling slightly less confident about the economy. And finally, we're nearing a big day here at Yahoo Finance. It's our annual Invest event on November 13th, starting at 8 a.m. Eastern. We've got a full day of live global coverage of the key themes driving the market, AI, crypto, and a whole lot more. We're going to be talking to industry leaders like Strategy's Michael Saylor and Palantir's Alex Karp about those mega trends. We won't want to miss it. Well, that's going to do it for today's Market Domination Overtime. But don't go anywhere. On the other side of the break, it's asking for a trend, and I've got you covered for the next half hour with the latest and greatest market moving stories. Stay tuned.